So, like to begin with, my name is Tikalom. I'm the director and the head of global BD for KuCoin Exchange. And it's my great pleasure to be here on this panel, to be the moderator of this panel. And besides me, we have like 5 panelists today. So maybe each of you guys can give a brief introduction of yourself first.
Sure. Hey, everybody. Casper Johansen, co-founder of Spartan Group. We do investing in Web3 and advising in Web3.
Hi guys, you want the energy? Because Kristal's here to bring it to you. They always say you hear me before you see me. So thank you everyone for showing up. Thank you Singapore. Thank you to the team for being here today and bringing all of us together and all these amazing panelists. And Tika, thank you for your time and consideration. I'll try to keep it a little bit more vanilla for you.
Hey everyone, Julian Kwan, I'm co-founder CEO of InvestorX and IXS, are the 2 regulated RWA platforms. Thank you.
Hey guys, I work for Avail, focusing on tokenization institutions. Go back a very long way in this space. I did the Bank of England project when I was at PwC in 2016, and since then did a lot of tokenization RWA work for Consensus, worked for Binance, Avail, and Polygon afterwards.
Hello, my name is Ryan, a co-founder of Hash. Hash started from 2016 and I'm based in Korea. Now, connecting Western Eastern. We're investing heavily on of course, infrastructure, but mainly a lot of application. Our goal is empower blockchain technology to mass.
Okay, thank you so much. So today our topic is about RWA tokenization, from US Treasuries to real estate. So what works and what doesn't, and so my first question to the panelists. So anyone who would like to answer first can feel free to speak it out. So RWA is actually not a new concept. We have been talking about RWA for more than at least 5 or 6 years times already. But why is RWA tokenization gaining so much traction in the current market cycle? And then what unique value does it offer compared to traditional investment models? Who would like to go first?
Okay, I can go ahead and start off. I think why it's gaining traction is because I think a lot of the institutional players are starting to really realize the point of technology and leveraging technology for real world use application to have better economies of scale, right? If you take a traditional finance concept, if I go to Wall Street, I need a certain X amount of capital in the bank, I call it flash cash or dead money. But by leveraging technology and blockchain to be able to have these economies of scale, businesses are now starting to realize that they could grow quicker, safer, smarter, in a more transparent and reliable manner, at least from my perspective. And I think in addition to now, RWA is not a meme coin, right? No offense to those who are in the memers and good for you guys, but we're talking about solving real world problems, and the underlying asset class is applicable to everyday single use, right? So people want to know that it's not just pump, but there's actually something of substance below what we're actually getting our yield from.
Okay, Julian?
Yeah, I think it's lots of different layers of the value proposition. I think tokenization first started as people thinking you could just raise money for a project because it was tokenized. That was all the way back in 2018. I think we've evolved through that now. We've found some real product market fit with bringing fixed income products on chain for all the stablecoin holders. Now we're seeing growth in private credit, all kinds of assets moving forward. And I think the real difference now is today versus many years ago is we found RWA having a tokenized form of equity versus paper allows you to do many more things with it, and lending and borrowing collateralization. And that's why the fixed income products, I think, have been gaining the most traction because people are able to use them in more forms than one. And so now it's sort of exploding. We're seeing all these different types of assets, and most of it coming just in the last year or two.
Yeah, so most recently the regulatory environment has become very favorable, right? For whatever reason, I think we are in a massive wave of deregulation. Paul Atkins, the SEC chair, Hester Pierce, so kind of we're in such a wonderful world for the next 3 years while President Trump is still around. We should make the most of it. But beyond that, the first tokenization company was my alma mater, Goldman Sachs, right? And this was before blockchains. We had something called SecDB. And SecDB is where we represented every possible derivative instrument as in an object-oriented manner. What that does, when you link every single piece of market data, to this object, which represents the actual financial instrument in a graph, then you essentially don't have to manage data across multiple systems. You don't end up with a reconciliation mess. You don't have multiple systems to kind of talk to, and the kind of shit we have to deal with in financial systems with these mainframe databases. You don't have to, right? So now with blockchains, initially when we Harbor started and all these tokenization like consensus, all of us were essentially trying to do the same thing, which is put behaviors of these financial instruments inside the contracts, right? So instead of like a piece of data that represents the actual instrument and then everything else, the behavior sits outside, we were essentially trying to put everything inside an object. And then those objects were called token standards. Now we have forgotten all of those. And the idea was that dividends, corporate actions, everything will go inside an object. And you don't have to deal with all the shit that we have to deal with in financial services, right? So now we have forgotten all of that. All we are doing is the RC20. But there's a lot more underneath the covers. And but that's the fundamental idea, right? You don't have to deal with multiple shitty systems, and you kind of simplify everything. And all markets are information markets. When you solve for information, you solve for everything.
Yeah, I have a Mac. So basically, I think an easy answer is just Trump. I think Trump made. We can explain everything.
He made RWAs great again.
That's the right answer.
Yeah, just
Which Trump, Eric?
So before Trump, actually, all the company and all the blockchain company want to define themselves, define their token themselves as a utility token. But now nobody care about the utility token. But now also the Trump allow company utilize all the traditional financial instrument. And for example, DAT is one of the thing all the U.S. companies are pursuing. So they can utilize the stock market. They can bring all the liquidity from stock market to crypto now. And now also so far until last year, most of the yields are from funding rate and speculation. But now stablecoin supplies surpass 200 billion. So they need to make more yields. So funding rate and speculation is not enough to generate the yields. So they expanded to real world asset, like real estate or some treasury bonds that can scale out. And so I think that's whole change to RWA thesis now.
Yeah, I think it's interesting just to pick up on the DAT point. If you look at RWAs, it's kind of, we call it real world assets. I guess the rest is fake world assets. And we're taking those and we're bringing them on chain and bringing them to the crypto ecosystem. But if you look what's happening with DATs, it's almost like the reverse flow, where you're taking, I guess, non-real world assets on chain and then putting them into a vehicle that now makes it accessible for traditional investors that cannot invest directly in tokens. It's almost like right now the trend, weirdly, is kind of like the reverse flow. It's just. So hopefully it'll go both ways, but there's right now certainly a lot more assets going into the DATs going that way than I see going the other way.
Yeah, very interesting. So actually, my second question for the panelists, actually some of you guys already have touched base a little bit. So it's more on the actual pain points. So what are the actual pain points you're seeing in traditional asset markets that RWA is really solving? So is it about liquidity, accessibility, transaction costs? So what are the real problems that RWA as a solution is addressing today? Who wants to go first?
All of the above. I obviously, as I touched upon it earlier, and I think everyone else here on the panel did. You guys all did a great job of addressing that. I think the key points are right, our transparency, accessibility, liquidity. You do have a lot of, let's just say, financial technology companies, right? Because I'm in the fintech space, that don't have capabilities to have liquidity to be able to get their investors out in a certain way, or the transparency models, or there's so many papers that even talk about that you're saving 100 bips per transaction eventually by leveraging the blockchain economies of scale, right? And so could you imagine being in Korea or in the Philippines or somewhere in Asia that you normally wouldn't have access to an institutional grade asset class in the United States that yields something that is sustainable and reliable because of the legal framework that the United States or other jurisdictions provide, right? And so I think that's amazing. By leveraging what we can from a blockchain standpoint, gives people a fair shake.
I think that this concept for us, it was like you see this whole boom of new digital currencies, and then an evolution of different digital assets verticals. So Bitcoin, Ethereum, smart contracts. Then you've got the NFTs, the memes, and everything. It was pretty clear to us 6 years ago that like all the other real world securities would come onto the same rails because they're just better, faster. The regulators would support this because it gives them more transparency than a paper ledger. So, and then it's still going to make sense. And if we can build a multi-trillion-dollar asset class out of people just DeFi, Ponzi-nomics, and ABC token for EFG token, then we can do a lot more when we bring in the real world assets. And why not? Like I used to get laughed off. I used to get laughed out of crypto conferences years ago because people thought KYC was stupid and tokenizing your equity would be stupid. But you'll see the world just coming. All the fintechs are coming. Everything's going to be on platforms. So it's fintechs, it's Robinhood, it's stocks to crypto to RWA, it's Coinbase, it's crypto to stables to RWA, and it's just better for so many different reasons.
Duty to defend Ponzinomics, because we saw the TradFi Ponzinomics with the NVIDIA, OpenAI, and Oracle kind of circular investing in each other. So coming from finance, I've worked in banks for the better part of my life. I've seen a lot of Ponzinomics, and but moving on from that, right? So I think when I was 39 and came into crypto, I was very romantic. Now I'm 49. I'm really unromantic. So I'm going to give a really unromantic answer. And the answer is reconciliation, right? So if you work in front office, middle office, back office, or you work in financial market infrastructure, trading, matching, settlement, clearing, and all of that, right? Post-trade, all that bullshit. So the biggest issue is reconciliation, as in information is fragmented, right? So what you want to do, and that causes all sorts of issues. Everything else follows from there, right? Transparency issues, inefficiency, post-trade costs, financial accidents. You don't know what's inside the instrument. So I think what we're trying to do is really improve information, availability, which improves liquidity, which brings transparency, which brings all of those things. So fundamentally, there is an information dimension to markets, which we are trying to improve. And, of course, cross-border, stable coins have proven themselves. Nothing has proven itself with KYC yet, just to be very clear. As soon as you bring in KYC, something bad happens on blockchains. But hopefully, over a period of time, will make things work in regulated markets as well.
Yeah, already touched a really good point. So maybe I'll add on the scalability perspective. So for example, like if I'm running the hedge fund, I want to raise money, I have to go LP one by one, and I have to persuade them. And then like maybe I can make a fund properly, then I can run there. But now it's like, I can make a protocolize my funds. And for example, I just post my, the detail about my funds, then just open for the smart contract, and all the like random retail, they can put money into the smart contract, then like right away they can run the like funds. So I think this like RWA, the narrative give a lot this like the financial companies to raise their funds and maximize their capital through a DeFi flow. And I think that is one of the biggest benefit of the RWA sector.
Yeah, I think just the adoption is going to be driven by where the money is, and the money's on Wall Street. So for RWAs to really get adoption, it has to solve problems that exist on Wall Street. And then there's going to be lots of other great problems that are solved as part of that, including like access to wealth generation and US dollar in emerging markets, frontier markets, et cetera. But I think for Wall Street, they will want to, quicker settlement times, be able to trade more around it, more leverage on it. So basically, just be able to, do the Wall Street version of degenning into a much bigger asset class that then becomes liquid and they can trade around it. And I don't think there's anything wrong with that. That drives more efficient financial markets. But I do think those are the problems that are probably need to be solved first, rather than tokenizing your own apartment or house or whatever.
Gotcha. So today's our topic is from U.S. Treasuries to real estate. What we're trying to cover is like different kind of assets, right? So when we're talking RWA nowadays, so from all panelists like perspective, who do you think are the like key player that pushing the whole development? Is it the retail or the institutions? And in terms of the asset class, which is the one, I mean, like everyone knows that it's Treasuries that moving forward a lot on the RWA development. So what do you think, so how do you think it will go to real estate, and who is going to play the more important role? Let's say it's a retail or in institutions.
All of the above. So I think it's both. I think institutional players are obviously going to drive a lot of liquidity into the marketplace, right? But then you also got to make sure that it also depends on what your goal is too, right? Or if you are more retail focused and you have a token, you need to make sure that you have the retail adoption. Or if you want to have democratization to credit, and you want to provide those people globally access to a credit market that they normally wouldn't be able to get, right? I believe one of the biggest asset classes that is really untapped, and I think everyone's touched upon it a little bit, or more so you, Casper, is that the private credit space, right? Consumer credit and business credit is the biggest asset class in the world. You're talking multi-trillion dollars on the blockchain, right? People having that capability to tokenize that is a game changer for the financial services industry. Being able to tokenize their portfolios, we're already seeing it with BlackRock, right? What other big funds are going in to tokenize their equity positions? And we're having these conversations with these people who are now starting to realize, they're like, holy moly, we can start tokenizing our private fund. And equities, stocks, private credit, consumer credit, business credit, merchant cash advance, revenue-based financing, I think we're going to start seeing a huge wave there.
Yeah?
Yeah, I think it depends on sort of the assets. There's use cases coming out now. I think the main buyers of the treasuries were, I think, like crypto hedge funds, sophisticated people in crypto. The degens weren't buying that. Is that why they turned me down? So what else? I think you've got now like the big crypto exchanges. They're all looking for the same types of assets, but that's just because they're the opposite of crypto, right? U.S. Treasury versus a shitcoin. So that's one subset. But then you have a whole bunch of others. You've got the crypto exchanges all looking to do the tokenized stocks. So that's again depending on what they've got. So it really depends. Is it retail? Is it institution? Is it for lending? Is it for borrowing? Is it people seeking yield? And it's just like the rest of the capital markets. There's just so many different things going on. Just depends where you're playing.
So I'm going to define shitcoins now. So, because so if you look at a lot of I've been pitching this tokenization thing to some very large institutions since 2016, starting with the Central Bank of England, and I think private equity was not really interested. They were making money hand over fist, and they were printing right, left, and center. Now they want to tokenize because I think it's really not great out there. If you actually check out Bloomberg and what's going on with private equity, there has been a lot of yield compression, return compression. Now they need exit liquidity, right? So a lot of this stuff is actually pretty bad shitcoin, right? So I mean, if you look at actually what's in the assets, like remember collateralized debt obligations and the kind of stuff that we were selling. So a lot of the private credit stuff is actually pretty bad, right? And obviously no one cares right now, but we'll find out. So we got to be careful with putting TradFi shitcoins on the blockchain. And if you put trash on the blockchain and tokenize it, it still remains trash. So if you look at where the demand is, right? The demand is for US dollar. It's a great asset. Everyone wants it. The demand is for gold. It's a great asset. Everyone wants it. The demand is for Bitcoin. It's a phenomenal asset, probably the greatest in the world right now. Right, and then treasury bills. So high quality liquid assets have a lot of demand, right? We've been tokenizing equities for a very long time, but unfortunately because the crypto is a very small market, and it's like 100 million users total max, and 10 million per day maybe max. So it's very hard to get a Google or a high quality stock to really launch on a blockchain natively. Whereas Robert Leshner's Superstate and now are starting to tokenize, let's say, Galaxy natively, and then some of the DATs natively. So a lot of cool stuff is starting to happen. But what we need is a banger, right? Like we need a Google direct listing on a blockchain. The next Google, the next Databricks, the next OpenAI. When that happens, I think we'll change the world, because we need high quality assets. If there is no demand for an asset, tokenizing it, you might get some exit liquidity, but it's still trash, right? So I think it's really about bringing more quality assets that have demand.
Yeah, yeah. Of course, like I think a credit or like equity, there's a very big wave, and obviously there will be a huge market in crypto, and State or also Robinhood is bringing all the equity to the on chain. So yeah, it's inevitable. Just I want to give a little bit new color that like what else there, and I truly believe the IP is really related to the RWA sector. And obviously, I'm Korean, and Korea has a lot of like, IP power in the K drama, K pop, and K movie, etc. And if you think about like the PUBG Penguin, even though they're not, no, they started from meme coin, now they're like transforming to the new type of IP, especially very strong in the crypto world. And but existing IP, there's not many existing IP were successful in crypto world. So, so IP, there's a two axis. One is like how the influencer that IP is, and the other thing is a capital market. So the meme coin, what meme coin made was they made a capital market, but most of meme doesn't have any revenue source. But IP, they have a revenue source, but there's no capital market. So when IP can cover capital market, also revenue stream both, then that IP will be huge, will make a huge market in terms of RWA.
Okay, so good to see another member of the SY fan club because
Yeah,
Pokemon cards took off. What I want to see is tokenized Labubus.
Yeah. So Demon Slayer, or the Japanese anime, one of the most successful one. Surprisingly, nobody knows this, but they're making $10 billion every year, and it's still growing. And Pokemon cards as well. So yeah, we're looking at it very closely, and eventually it can be a huge trend in the RWA.
I mean, in terms of the question of whether it's going to be driven by institutional or retail, I think clearly institutional would be my view, that they're going to drive the adoption of this. They're going to do by far the most volumes, and then the fees are going to be made off of retail.
Okay. Very interesting insights from the panelists this time. So my next question will be, so what are the primary barriers to mainstream the adoption of the RWA tokenization? So what are the most critical challenges that nowadays we have to overcome? Anyone?
Yeah, well, I think the main challenge the last couple of years, there's been many infrastructure, regulation, asset quality. I think the main challenge now is just the volume of buyers. So that's solved when you plug into a crypto exchange with 25 million users or a fintech with the same. So now that they're clearly showing that they're here and they want to buy stuff, I think all the barriers are predominantly gone. And now you got to work out how to scale.
Yeah, just high quality assets, right? I mean, Google, OpenAI, these guys still don't want to particularly list on a blockchain, but we just need one of them to really, for this whole thing to prove its value. The rest follows, right? I mean, and we have 3 years to do as much as we can, because if Elizabeth Warren comes back, I would be slightly concerned.
I think still the friction of regulation. I think US, obviously, like, everything is going at once, but Asia part, like all government has still doesn't have a consensus between in the Democrat or Republican or like the various parties. So for example, like in Korea, the BSUM, they opened the institutional accounts, but still the regulation doesn't allow institution can hold the crypto asset. So like like there's a lot of friction. Like someone wants to follow the already preparing that word, but someone is stuck in the the self-compliance, especially like traditional world, like a banks or financial institution, security firm. They're stuck because like there's no clear guideline. Yeah, so I think once all the regulation is clear, then like it will be expedited.
Thank you, guys. So one last question for you all. So looking to like 3 to 5 years ahead, so which asset classes you think that you predict will dominate the RWA tokenization market, and what factors will drive their success? Who would like to go first?
Consumer credit. Consumer credit. Business credit, consumer credit, institutional capital coming in. And what was the second part?
Are you working on consumer credit?
I thought you wouldn't think so. Would you think so? Have you checked this out?
So what is the factor to drive the success for consumer credit?
Institutional capital coming in to backstop the capability to see it soar, for sure. But listen, everyone needs money. right? It doesn't matter if it's a dark and stormy day or if the sun is out. Everyone needs money to pay their bills, get their groceries, to buy their kids books. They have a healthcare emergency, whatever it is. People need money, and it's, as I said earlier, it's the biggest asset class in the world.
Yeah, I think that there's a lot of truth to that. I think if we look at what's really taking off right now, I think the tokenized assets that will have multi-use, yield's already one, but where you're then taking them into this kind of crossover of DeFi, CeFi, where you're lending and borrowing, and there's this multi-use to it. I think that's going to be a big determinant of which asset classes end up being the biggest, but probably all around this credit and debt and sort of financial instruments looks like the direction today.
Yeah, so I have a pretty controversial view on this, that institutions do two things. One is we are aggregators of retail money, right, on the buy side, one directly or indirectly, or we are apes in suits, right? So having worked at trading desks as a risk person, PRDCs, interest rate exotics, FX exotics, all of it, and seen 3 or 4 crises, we are apes in suits. So we need to give people something to gamble on, right? Like there are only 2 reasons people come to financial markets. One is yield, right, to make more money, and the second is to gamble. Now, we are seeing meme coin stocks like Open Door and whatnot being shelled by Pump, and there's no real difference, right? I think it's just, so I think we need people opportunities to make money, quality assets, and hopefully not fuck it up too much, right? As in no financial crisis on the blockchain, please, otherwise that'll be a real problem.
I love it. I only want to do panels with you from now on.
A privilege.
Yeah, I'm looking at more like equity side. It's like U.S. stock. Obviously, still like so many investor out there cannot access to U.S. stock market, and private stock as well, like SpaceX, like Neuralink, the kind of like rising stocks. Are still there's no exposure. So I think on chain now introducing a lot of private stock already, but once like the market liquidity was fluky, then I think more accurately they will consider this route to expose their own chain liquidity rather than like traditional the IPO.
Casper?
Yeah, I think it'll be driven largely by asset class or asset class size. So one of the biggest asset classes or trading markets is foreign exchange. So I think that could be an interesting market to tokenize and to look at private credit, consumer credit, commodities. I think we're going to see tokenization come in there because there's still a lot of settlement times, inefficiencies, costs. I mean, 1 basis point cost is maybe not that much, but when you're doing it across trillions of dollars a day, it kind of starts adding up. So I think it'll come into, in the very large asset classes where it can make more of an impact. It's easier to talk about tokenization of real estate or other assets because everyone they get it, right? You take your house, break it into 1,000 shares, and you can sell it. But a lot of people don't really see the financial markets day to day. But those volumes are just so massive. So again, I think business will go where there's most optimization to be done and money to be made.
Okay. So yeah, I think time is running out also. So we had a really good time, a very insightful 30 minutes of panel discussion here. So I would like everyone to give a big applause to our panelists here today. And then thank you so much for joining us today. Thank you.
Thank you.